Good morning, everybody, and welcome to the first mortgage clinic with Saffron Building Society. I'm joined today by Roy Mason, who is from Saffron Mortgage Finders, and he'll explain who they are. And we're here with Tay Sturgis as well from Saffron Building Society. This is a live and interactive webinar, so if you have a question for us, there is a chat box. Feel free to pop your questions in there, and I will, throughout the course of the next hour, I'll put those questions directly to Roy and to Tay. So do feel free to submit your questions. We're accepting questions on a variety of things. So anything to do with mortgages, feel free to pop those questions in and we'll answer them as quickly as we can. Before we go on, Roy, why don't you introduce yourself?
Hello, Roy. Yeah, so I'm Roy Mason. I'm a mortgage and protection advisor with Saffron Mortgage Finders. So we are what's called an appointed representative of what's called a network, and this is called Open Work. It's them that they are authorised and regulated by the Financial Conduct Authority, and they have a panel of about 50 lenders that we can choose from.
Great stuff. And Tay, welcome. Do a little introduction of what you do at Saffron.
Hello. So I'm Tay Sturgis, and I manage the mortgage servicing department. So we're kind of like a dual team. We handle all new and existing business. So we're dealing with customers, brokers, solicitors, the whole shebang.
Great stuff. Okay, so as we said, it is interactive. So if you have any questions for Tay or for Roy, do submit your questions in the chat box on the right-hand side. We're here for an hour. To start us off today, though, we are going to do a bit of a sort of remembering the process and using the broker section of this webinar. So we want to get to grips of the best ways that you can obtain the best mortgage and working with a broker. So, Roy, essentially you're a brokerage service. Why is it beneficial for a first-time buyer or somebody who's remortgaging that perhaps didn't use a broker before? Why is it beneficial to use a broker to find a mortgage?
Simply just that they've got the best degree of choice. So rather than going to their own bank or building society perhaps directly, and that may not be the best provider for them, the broker will look at their circumstances, their needs and their requirements, and then give them the recommendation from the best offering across that their panel, in their case 50 lenders. And they can guide them through the whole process. So, you know, it's advice and guidance through the whole of the house buying process from that first inquiry to moving in.
Brilliant. Tay, I'm aware, but perhaps our viewers aren't, but Saffron Building Society work with brokers for the majority of your business, don't you?
Yes, yeah. So yeah, exactly that. The majority of our business does come from brokers. We have a brilliant business development management team as well who build these relationships with our brokers. And of course, myself and my team work every day with brokers to get all of our lovely customers' applications through.
Great stuff. I'm going to talk a little bit about first-time buyers. It's a touchy subject in this current market, but recent news has said that there's been a massive uplift over the previous months that have just gone through the process. So first-time buyers getting onto the market has not actually been halted, even though the products aren't there for them as they would have been before the pandemic. So is it really down to the bank of mum and dad, Roy?
For a lot of them, it will be. Unfortunately, as you've alluded to, the pandemic has had such a major impact. It's caused lenders to change wholesale what they're prepared to consider. You know, they're asking for bigger deposits. They want to know people's incomes are secure. And certainly with the issue of needing the bigger deposits, you know, that is definitely, I think, the Bank of Mum and Dad are the biggest lender in the UK, bar none at the moment, and they need it more than ever to help them get onto the ladder. So my over 30 years in the industry, I've never known a time like it for first-time buyers. So they have my sympathy.
I don't think I'd want to be a first-time buyer in this market because it is sort of up and down. On that note, though, Roy, there's been products that have been on the market and then just suddenly disappeared, and sometimes overnight. Is that the pandemic's obviously causing this? Is this likely to continue?
Yes, I think it is. It's called fire sales. So literally, the lenders know that the demand is out there for these people that first-time buyers and people looking to move, but with less than 10% deposit. Lenders know that they're already under pressure with their staffing and their servicing. And they know that if they come out with a product in a space where nobody's operating, they're just going to be inundated. And we've seen lenders' systems crash. You know, brokers like myself having to get up at 7 o'clock in the morning to compete against everybody in a race to get one loaded whilst they have a short number of deals that they'll allow that day. So it will continue. And it is where the broker can come in to have an awareness. We normally get a little bit of advance notice that a lender's going to launch a deal on a certain time for a certain number of days. And we've already engaged with our clients. We've got all their documents. We can be ready to go literally first thing that deal becomes available.
Great stuff. Tay, on that subject, we worked together on some first-time buyer products during the lockdown. They lasted for 24 hours, wasn't it? So you know, there's obviously a market out there for it, and obviously every lender, I suppose, has a criteria that they have to meet and a number of products that they can offer. Is there likelihood that we could see first-time buyers products coming back to market?
Absolutely. So something that we're looking into, and ways that we can not do it better, but streamline the process. So as Roy said, systems crash. I mean, luckily ours didn't, which is a good thing. But the sheer volume of applications that came through, you know, we want to help all of our customers, and we want to be able to offer that type of product out. But it's getting it right and doing it right for the customer. So it takes time to nail down that kind of process, and it's absolutely something that we're currently working on.
Jay, when that Saffron product was launched in June, I remember the days very vividly. We had, over the course of about 3 days, the product was already gone, but we had over a year's worth of inquiries in 3 days.
Wow.
Such was the demand.
Wow. It just says something, doesn't it, about the way the market is sitting for first-time buyers. That brings me on to a subject that I want to bring up, because there are products out there, and actually Saffron has a particular product that I want to mention with you, Tay, called the Joint Buyer Sole Proprietor Mortgage. That's a bit of a mouthful. And it's probably
JBSP.
something that JBSP is so much easier to say. So JBSP, just for the sake of our viewers, and Lloyd, I will get to your question in a second, but just for the sake of our viewers, just explain what a JBSP mortgage is.
So, as Jay correctly put it, it's a joint borrower sole proprietor. So it's for first-time buyers who don't quite meet affordability. So you're going to have some joint owners. That could be a young couple, and they need their dad or their mum to come on to support them. So the parent makes up that shortfall in affordability. So it's a great way of being able to help first-time buyers who don't quite meet affordability. And we're seeing some great applications come through, and we're helping a lot of people with that type of product.
Brilliant. That leads on to Lloyd's question, because another thing that's been sort of changeable, I would say, over the lockdown period is gifted deposits. Lloyd has put, broker told us that a specific lender wouldn't lend because he was gifted 25% of the deposit. Now, do you have any restrictions? Actually, Roy, let's go to you across multiple lenders. Are there restrictions on gifted deposits?
There are from some lenders. Again, I suspect the lender in question who were the first to announce it, but others have followed suit. I just think it is a way of lenders managing the demand, and they know that those people, because the 90% products either don't exist or in very short supply, they'll know they'll be supplemented with a gift from parent, and if they feel that's going to overwhelm them, they'll just come out with a policy constraint saying you can't do it. So yeah, they're not the only one. There are a couple of others that also restrict it.
Tay, now this is a subject we can quickly discuss. Gifted deposits with Saffron, how do they work? Do you accept them?
Yes, we do. Yeah. So we see a lot of gifted deposits come through. I mean, as Roy said, the situation, especially surrounding COVID, is ever changing. So lenders have to constantly look at their policies, and, you know, what do we accept, what don't we accept? Do we need to adapt that because of the situation? But yeah, we do accept gifted deposits.
So, and there's no limit. So you could be 100% of the deposit.
Yep, we've seen 100% gifted deposits. Yeah, it can be a build up of numerous different things. So savings, gifted, etc.
Brilliant. We've got a question, so I'm gonna not go on to our next subject just yet and answer the questions as they come in. So this is from Robert. Robert's asked, for first-time buyers, is there such a thing as being too old for a first-time buyer mortgage, Roy?
Short answer, no. Lenders typically will have an age of 70. So the all mortgages are assessed on affordability. So if you are an older applicant, then it's the time you've got left between when you apply and, say, age 70, in some cases 75. And then if the lender deems you can afford it over that time that remains, they'll be happy to go with it.
Brilliant. Okay, so let's move on to our next one. Just going back to working with a broker, Roy, one of the things that's been quite evident over the course of the lockdown period is the length of time that applications are taking. So there's been quite a lot of discussion across various lenders. We're not picking on anyone in particular, but but with these products changing as well, so the application process slowing down, and then these products coming and going without any kind of pre-warning from a borrower's perspective. Do you have any advice for people planning to take out mortgages? Is working with a broker, does that streamline it slightly?
Yes, it does, in my opinion, because unless the person actually knows that lender is definitely the right one for them, and they know exactly what that lender's likely to ask for, they could be in a position of going through all that effort and not be successful. Most lenders prefer to deal with intermediaries because then we're giving the advice, we're carrying the risk, we know how it works, we know the likely things they're going to need, and we can guide our clients to say, let's have that in advance. I alluded to the term of a fire sale recently. Again, we're telling clients we need all of the documentation in advance so that as these deals become available, we're in a position to just submit it straight away.
And I suppose that's the benefit, isn't it? Because even if you've had a mortgage, so you've had your first house and actually looking to remortgage or you're moving, I can't remember the process I went through, and I would never know everything I could put together. So actually doing that on your own without the support of a broker can actually be quite difficult.
Absolutely. And the other advantage we have, of course, is that with the deals, as you said, changing so quickly, the other advantage we have is once we've got that, is very likely to be the same thing that most lenders will want. So if that deal is gone, we can then just switch straight into the next best lender who's currently offering and continue the process. Brilliant.
Over to you for a second, Tay, because on the application process, we were discussing this earlier, that the one USP, I suppose, about Saffron is the fact that all of this is done in-house. It's not algorithmic. It's done on a case-by-case basis. Is that correct?
Yes, yeah. So we're not a computer says yes or no kind of lender. So, yeah, everything's manually underwritten. We've got a great team of underwriters, my guys as well. So we're the ones that are trawling through all your documents and making sure everything's in order to pass across to underwriting. So everything's looked at on a case-by-case basis. And if we get some really quirky different applications come through, quirky streams of income. So it's a way of how can we make this work for you? And, rather than no, it doesn't fit.
I've got some questions that have been pre-submitted on special situations. So I'm going to go into that a bit later on, Tate, so we'll pick up that. But we have got another question. Jennifer's asked us if we can go into more detail about the joint borrowing mortgages, so the JBSP. So I presume, Jennifer, I'm sort of guessing on your question as to what you're looking for is how a family member can support a first-time buyer. Just Tate, do you want to just explain how they use their income to supplement the borrower's income?
In all honesty, it's probably more of an underwriting type of question. I wish I could answer it, Jennifer, but I think it's potentially one, unless Roy has got anything he's experienced from other lenders and their underwriters. But I can absolutely take that away, and we can get a response from one of our underwriters for you.
Just to answer another part of the JBSP that Jennifer might be questioning is also you can use a gifted deposit for a JBSP as well as being a joint borrower. Jennifer's asked again. Yeah, so they're parents and they want to help their son buy a house. So I'm presuming Jennifer's son's perhaps not on the best of wages, perhaps caused by the pandemic. So Jennifer, if you go onto the Saffron Building Society website, saffronbs.co.uk, you can actually have a look at the criteria and the layout of the JBSP on there. But we do have your details, so I can get some details sent over to you if there's anything specific you wanted to ask. But yeah, so the JBSP is designed that you can use your income to make affordability criteria basically for your son. So it's definitely worth having a look at that product.
Yeah, just on that point, so it's essentially the owner borrowers, so your son would need to meet a certain level of affordability, and then you would need to meet the shortfall part. But Jay's absolutely right. There's so much detail on our website, and yeah, we can absolutely come back to you with a more detailed response from one of our experienced underwriters.
Brilliant. And that's a great thing as well, as we were saying earlier, the underwriters are within Saffron, so they can look at each individual case. And Jennifer, no worries, we'll get that sent over to you. So Carolyn's a parent who wants the children to take a mortgage out for a property they live in. So I'm presuming that she wants the children to buy the house, but she wants to remain living in the house for the foreseeable. Roy, what sort of situation is that? Is that something you've come across before?
Yeah, I mean, it's more common. I think basically the simplest way of lenders will look at that is that you have part of the process where you declare if anybody else who doesn't necessarily going to be owning the property, but is going to be living in the property, is aged over 17. And they sign a form basically saying that they will be, and that they are aware there's a mortgage, so that the lender's happy. So yeah, it can be done. It can be done.
I hope that answers your question, Carolyn. Thanks, Roy. Thanks, Tate. Okay, I do have another question actually, so I'm not going to skip onto our other subjects yet. So what support is there out there for bad credit scores? Because obviously we're all aware of our credit scores at the moment. We've all got out, we can all see where we sit. What about those who have bad credit, so have maybe had a bad situation in the past that is sort of holding over their credit score? Is there any flexibility with lenders, Roy?
I think generally lenders are all becoming a little bit more risk averse. So even within the market that, what we would call a specialist or secondary market that would look at those, the choices are going to be fewer, the criteria will be tighter. But yes, there are still lenders out there that operate in that space and will take on certain cases, but they'll have their own criteria. Lovely.
I hope that answers your question, Maldu. Rob has sent in a question. Sorry, Rob, if you try to be private, I won't give you a surname. So, situation, Roy, we've discussed this before. Following a divorce, looking to buy a property again in early 50s or 50 in early 50s. What is the possibility of buying, and for what period at that age?
Yeah, you've got a couple of options. Well, one main option potentially. Certainly at that age, still working, still employed, or still earning. Then you've got a conventional mortgage that you take to a term of say 70, 75, depending on when you'd retire. There are some lenders that will do. I think. Sorry, did you say that Rob said that it was 50?
50, yeah.
Okay, yeah. Some of the other options may not quite be available to him yet because he's too young. Some of the other options are available when you are over 55. But there are still options out there for him.
So if Roy can't get it now, he will be able to get it in 5 years' time. So Roy, you're not over the hill. It's fine. You've got plenty of time. So that's good. So Rob, I hope that answers your question. That's on the question side on this side. So we go to the pre-submitted questions. Furloughed income. I know we've briefly discussed this. But there's going to be a good majority of people who are going to remortgage, or are, and as we've discussed already, first-time buyers. Are lenders taking into account furloughed income? Is it a sticky point? Is it a difficult point for lenders? And it will make it more difficult for people to get on the market, Roy?
Again, unfortunately, most of them have publicly said now they won't. With the scheme due to end this year and the announcements about its successor, I think the lenders are wanting to see the fine detail about this new scheme, how it will work, and those people that are currently furloughed, will they return to work? Will they go on to this new scheme? So a lot of the mainstream lenders have said that they won't take on new applications if people are still furloughed, and some have even gone slightly further. And they've stipulated there are certain criteria about how long you've been back from furlough. Unfortunately, at the moment, by and large, if you are currently furloughed, most lenders won't take on an application at this stage.
Is that the same for Saffron, Tay? I presume you've seen quite a lot of this over the recent months.
Yeah, it's kind of different for us. So we are looking at stuff because we have the luxury, I'd say, of having manual underwriters. We are looking at stuff on a case-by-case basis. We might be asking for documentation over and above what we would normally request. But that's just to ensure that we're satisfied from a responsible lender point of view, and that we can help those individuals that may be furloughed. So the additional documentation, maybe we're going to write to the employer and request an employer's reference, confirming are they back at work, when are they due to return to work, etc. But it's an ever-changing, again, like I said earlier, an ever-changing issue. So it is more of a common sense approach and taking a view on different cases.
Okay. Mohammed, there's another question with regards to the bad credit scores, lenders. Roy, he's asked if there's any specific lenders and if you can find specific lenders that would look at people who have some adverse credit.
Oh yeah, there are quite a few. Most of them will be companies that the public won't have heard of, and they this is one of the areas that they may solely or predominantly operate in. We are a credit nation. Things do go wrong, not to the scale that obviously any perhaps would have seen with this pandemic, but yeah, they will still be operating in this space. But yeah, we have access either directly to certain lenders, and there's a whole specialist market where those lenders will only deal with certain specialist brokers who we have access through to Openwork as well. So the reach is quite broad. So yeah, we can definitely help people.
So advice to Mamadou then would be, if he's a little bit concerned about his adverse credit, to have a conversation with you guys or a broker is probably the best approach. I presume it, as an individual, would be quite difficult to identify these companies, wouldn't it, Roy?
It would be. Yeah, it would be. I think the thing to do, again, and I don't like using jargons, forgive me, but I think what a lot of people need to apply for, if they have any concerns, is what's called their statutory credit report. There's usually a requirement to have to pay a nominal fee to one of the big credit reference agencies, provide their full names, their address for a 6-year record, because quite often, as we see as brokers, when people pay for these subscription services from these companies, they get an abridged or a summary version. And what lenders will see when they make their inquiries is the full version. And there is some things that the customer won't see. So they need to apply for their full statutory report. Once they see that, we're not authorised and regulated to go through. We're not qualified to, but we have experience. But they'll then they need to look to find out where those issues are, and if there are things, if there's any errors, they need to, because it does happen. They need to address them with those companies and get it corrected, because obviously it has a massive impact upon their credit file and their credit score.
I think a lot of people don't realise that. I certainly didn't until I joined one of the online services and then paid the extra to look at my full report. There were people that lived in my house prior to me on my credit report. They were pulling my credit file down, and I've had no interaction with these people ever. They lived here before I did. I think people need to realise you've got more control over your credit report than you might think, and also that these apps only show you a summary. I think that was something I didn't know when I first signed up to them. That you got these apps for the 3 different credit companies who are producing this app and making you think that that's all you're going to see and that's all lenders see, but actually it's a lot more complex than that. So again, a bit of advice from Amadou might be to go to each of the credit reference agencies and get their report, because they are all different as well. Different lenders use different people. So a question that we can ask for both of you actually is from Lloyd. Both himself and his partner were made redundant due to COVID, but both went straight into a new job with no gap in paychecks. So I presume just a matter of days. So well done on that to start with. Would both being in new jobs cause a problem on an application? Let's go to you first, Tay.
No, not necessarily. So what we would want to know is that you have, if you have a probationary period, and if you have, whether you have passed that. So it may be that you're one of the lucky individuals that doesn't have a probationary period, but we would look to get confirmation from your employer of that. So that could just be a letter from them, or it may be an employer's reference that we request.
Brilliant. And same back to you, Roy, across other lenders.
Yeah, again, very similar to Tay. I think the landscape is slightly different. I think whereas pre-COVID, that wouldn't have been an issue, especially if you're doing the same sort of job in the same industry. Lenders wouldn't have thought twice. Now they are wanting to understand what industry you're going. Is it the same job? As Tay said, is there a probationary period? Is the industry you're moving into now one that they consider to be a higher risk, that it's now more likely to be impacted by COVID than the one you left? All of these sort of questions. So there's a lot more scrutiny around what they call the sustainability of that person's income.
I think that's, sorry, just on that point, Jay, I think that's really important. What Roy's just said is that how applications are being underwritten now is kind of different to what it was pre-COVID. So it might seem quite stringent, and we need all these different things from you, and it might seem quite excessive, but it's needed. It's needed to ensure that we're giving you the best possible outcome as well as being a responsible lender.
I think it's difficult as a borrower to realise that your lender has so much. They put so much risk into giving you the money in the first place, and that's why they need this information. So that was going to be another point I was going to raise, is that as a country we are currently in such a weird place with London's just gone into tier 2, Manchester's fighting to stay out of tier 3, and all of these different restrictions have different effects on different industries. So if you work in the hospitality industry, your career's dive bombed, and for no fault of your own. And certainly some of these people rely on an hourly paid job. They might well be senior in what they do, but they're still hourly paid. So it's a difficult time for everybody. But on the flip side of that, though, there must have been people, Tay, that you had apply before lockdown. Everything paused, didn't it? Everything kind of just went a bit pausey and then started to lift up again during lockdown. And then obviously the market kicked back in once restrictions went through. Did those people that applied before suddenly would they now not find themselves in the affordability criteria? Do you think there's been a big shift in that?
We'd seen a few applications like that. We'd also seen a few applications where people had decided not to proceed because everything was so uncertain. So yeah, it was a strange time. It's still a strange time. We're still seeing some strange things. But yeah, there were certain bits where we didn't really know too much about furlough. Everything was a bit up in the air with the government giving out different advice all the time. So it was hard to follow everything and make sure we were doing what we should be doing. But yeah, there was definitely some applications where they then didn't fit. But of course, we did what we can to get these applications through.
So on that note, Roy, obviously with this current situation, is there a fundamental shift in what lenders are doing? Obviously, we talked about products coming in and coming out and not being available. What is the second lockdown, which is a very big possibility? What's that going to do to the market, or can you predict what that's going to do to the market in the coming months?
I think it certainly means it's not going to get any better in the short term. And in some respects, I fear that it for certain people, like self-employed, it could be worse, because I think the lenders, their appetite for risk will be even less, as that uncertainty, which banks, lenders don't like uncertainty. Until we know exactly what the impact of these restrictions are, either locally or on an individual. Most lenders have got a national policy. They then got to try and make that fit for an individual customer. So they've got to be able to, under treating customers fairly, they've got to be able to demonstrate they're applying it consistently. So I think that's why lenders are looking at the industry you're working in, looking at your contract of employment. I've even seen lenders now, looking and asking for pay slips pre-lockdown, comparing them to pay slips now to see if there's been a change in your income, because unfortunately, employers, probably with the best intentions, trying to help out some of their employees, are, should we say, making the pay slips appear perhaps as they shouldn't be. And lenders don't like to feel that they're having the wool pulled over their eyes. So, that is, as Tay said, that is why so many more questions are being asked, why so much more documents are being asked for, and why it's taking so much longer.
You tapped in very beautifully there to my next question, which is, how easy is it for somebody who's self-employed to get a mortgage?
It is a lot more difficult, to be honest. I think it'd be, as much as it's taking so long, even for employed customers, when you've got P60s, pay slips, they can understand that very easily in the job you do. With a business owner, somebody self-employed, they haven't got that. A lot of the information usually is historic. Lenders won't take anything up to more than 18 months old. But now we're just into October, for example. They'll want your tax information for no later than April of last year. So it's no more than 18 months old. But of course, that's historic. It could be predominantly be pre-lockdown. So they really are having to guess what that person's business is likely to generate in terms of turnover and profit going forward. And most people who are self-employed will tell you their accountants won't do that for them. And if the accountants won't, the lenders surely won't. And they will restrict. They'll take an average perhaps of the last 2 years, and then take a percentage of that income, maybe only 75, 80%. But then it's no guarantee that they'll be happy to lend the amount that the person thinks they should be entitled to, unfortunately.
Is that the same for you guys at Saffron, Tay? Because I know you offer a self-employed mortgage and for contractors mortgage as well, but I presume you've seen the same. Obviously, you've got the benefit of the underwriting team in-house, and the lack of so many algorithms, but has it been a challenge for you with regards to self-employed?
Yeah, absolutely. So the underwriters are being very careful, as they should be, with assessing documentation and getting the right type of documentation to be able to prove affordability, and, you know, not just for our purposes, but to make sure this is the right thing for the customer. So it could be that we need to go to the accountant, get an accountant's reference, but as Roy's rightly said, the accountant may not be able to provide that type of information. And it may be that we can't just take an average because you had a really great year and then COVID happened. So it's very difficult. But yeah, we do offer an actual self-employed product, and that's for a minimum 1 year's accounts. And yeah, a normal standard product for self-employed. So we definitely do it. It's just the documentation might again seem excessive, but it's to help us and to help our customers as well. Absolutely.
And obviously, Saffron Builders Society perhaps isn't known by absolutely everybody in the country, but obviously you do lend a dramatic amount of money because you're going through brokers. So again, do you find that it's someone like self-employed going through a broker, Tay, is easier for you as a lender?
Easier for us, sorry, in what sense?
So if there's self-employed, if a self-employed person goes to a broker, the broker knows what's expected. Obviously, you deal with the broker.
Yes.
Is it advisable that they go to a broker so the broker can give them initial advice?
Absolutely. I'd absolutely suggest that. And we work so closely with our brokers, and the key, I think Roy touched on it earlier as well, is getting the documentation ready. You're always better to have too much documentation than not enough. That is something that will drag an application out, is not having all the documentation prepared and ready. So going through that route of going through a broker, they're going to be able to help you prepare your documentation and tell you exactly what you need for that particular lender or for us. But that's one of my top tips, is get your documentation ready and prepared.
Yeah. That does lead on to a question. It's a touchy subject because you work with other brokers, and Roy, you are a broker, but I'm going to have to ask you because he has asked it. Simon's asked the fees. Obviously, there's a fee with working with brokers. So obviously that adds an additional cost to buying. From my perspective, having used a broker, it was a much smoother process. So actually it was worth every penny for me. But what sort of fees can someone expect for a successful mortgage application was Simon's question, Roy.
Yeah, good question. Totally understand that. We charge £249. And it's non-refundable. We do that up to the point of application when we submit it. So what you're getting for that is our time to make sure we've understood your circumstances. As Tay's alluded there, make sure we've got all the documents from you. And the way we charge our fee is that if at the initial inquiry stage we just feel we can't help you, then other than a bit of our time and the customer's time, they've not really risked anything. If we feel that even in the current market we can help, then that fee becomes payable for our time to go through the process of advising the client, making the recommendation, gathering the documents, and interacting with the lenders to ensure that we can place it with the greatest degree of success. Some brokers charge £500, some charge a percentage fee, some don't charge any at all, because we get paid by the companies that we place the business with. But of course, that only becomes an income to us if the mortgage completes and goes through, which is a big question mark at the moment with a great percentage of cases.
Of course, yeah, so the market's not in the best place at the moment. So I hope that answers your question. We've got a question on later life lending now. So RIOs, RIOs as we call them, but RIOs, so retirement interest only mortgages, to release equity. What's the process behind this? Roy, I'll go to you on this one. So what's the process with these kind of mortgages to release equity?
Okay, well, they came off the back of essentially the mis-selling of endowments. It's really, and the regulators made the lenders have to come up with schemes about what they were going to do, rather than force people at retirement to have to sell their homes to pay back. So out of that, the RIO is born. I need to make a distinction. There is a distinction between retirement interest-only mortgage and equity release and lifetime mortgages. Somebody like myself, I am qualified to advise clients on retirement interest-only mortgages. A proper equity release or lifetime mortgage, you have to have additional qualification for. The main difference is a RIO is still assessed on affordability, but it is assessed on your income on the interest only, hence the name. Lifetime equity release mortgage usually aren't affordability assessed. The interest is rolled up with the intention the mortgage is repaid at some future life event, like the sale of the property, going into long-term care, or ultimately the death of the applicant. So RIOs are the sort of area that I can advise on for people that want to take on a mortgage for their later life.
Great stuff. And do you offer a RIO, Tay?
Yes, we do.
Just
yes.
Thought about that.
That was short and sweet, that answer, yes.
Yeah. So again, I hope that answers that question. I think that was from Mark. Just if you do have any more questions for us, we're pretty much running through the questions that are coming through. So if anybody has any additional questions, please just on the right hand side, type your question in the box, highlight the question circle. That helps me to find them. Do submit them through to us, and we'll get them answered. Roy, we've had quite a lot of discussions over self-build, and there's been quite a lot of conversations over self-build mortgages. Now, I know it's a big part of what Saffron offer, Saffron Building Society, but again, across the market. Is this a growing area? Are people going into self-building? Is this a new way of working? I.e., when you think of Germany with their percentages that are self-build or you know, what's the one, custom build, where you get sort of custom build. Is that growing in the UK?
Definitely, yeah. I think for two reasons. One, well, I think the fact that if somebody can find the land, they can then have a house bespoke built. So it's not a question of best fit. They're getting something that they want. The other thing is that we're seeing, because of the current climate, developers not wanting to build out all their land banks and then have all these houses they can't guarantee selling. So what some developers are doing is they're actually selling off the plots. They've done all the groundwork, they've done all the planning, and they're effectively offering each plot for sale, but essentially offering the client the ability to get a self-build mortgage, but the developer builds it for them. So quite a unique hybrid situation, but definitely those sort of inquiries are on the increase.
And it's the same for you, Tate, because again, you do have a self-build product. Have you seen an increase in over the last couple of years?
Yes, yeah. I mean, we love self-builds. We've seen a massive increase, yeah, and it's a really exciting thing for us to do. It's especially exciting for me and my team because we get the application in, you know, the customers go off on their way and start building, but then my team also deal with the drawdowns, and so we see the build sort of coming along. We're sort of there the entire journey with them, which is really lovely. It's great, but we've definitely seen an increase, which I think is great.
I do, and I think a lot of people's perceptions that a self-build is a grand designs type building, where actually it's more like Homes Under the Hammer, isn't it? It's a two down, but just as you want it. So I must admit, in my vision, I just thought of these grandiose houses on the edge of a cliff with glass fronted. Actually, in reality, it's not that, is it? It's more just a bespoke building that say a couple or a single person would want.
Yeah, I mean, we've seen some beautiful self-builds, some really quirky ones. Maybe not the sheer glass with a grass roof and, you know, made out of sticks and whatnot. But yeah, we've seen some amazing projects, and then some more standard projects. So it's each your own, isn't it? That's the great thing about a self-build. It's yours. It's how you want to build it.
What I love to see is there's plenty around the country. There's some really big ones in the Essex area. Is these plots where they're custom built, so they're very similar, but they're custom built to how you want them. So you might want an ensuite on every bedroom, or whatever, but they all look very similar. And so the estate kind of grows, rather than just being sort of the 70s 80s style box houses that all look the same. As you drive down the street, it's just stunning. And I didn't realise, I have to admit, as a non-person working in the mortgage industry, no idea how that process worked. And it's in steps and stages, isn't it, Tay? So you kind of release as each step goes on with these products.
Yes, yeah. So we would look, well, we would ideally have the customer utilise their own funds before we start injecting our money. So it may be that they'd have an initial drawdown, they need to actually purchase the plot. It may be they already own the plot. It's, you know, they're hiving off a section of their garden and doing a build at the end of the garden. But yeah, once they then need more funds, it becomes a thing of, as your loan to value changes, we can then release more money. So yeah, it's fun, it's exciting, it's great to see, you know, we get the photos through, we see all the invoices, and valuers may have to go back out. It's exciting. That and first time buyers probably my favourites.
That's good to know. It's nice knowing that you're so involved in the project. It gives it a real personal touch.
Yeah.
So nice. So nice. We've got a question from John. I'm going to read the question and see if I'm not an expert, so I'm just going to read the question. Roy, I'll send it to you, Tay, if you want to chip in. John says, I'm looking for an offset mortgage. Can I have over 200k in the savings side and the money be fully covered under the ×2 rule under the 85k rule?
It's a good question. My understanding about offsets, John, so very good question, is that under insolvency, you know, having a full offset, you're not under the depositor protection scheme. If your lender went bust, in effect, you would essentially, you know, it would offset your debt. So you wouldn't necessarily have the mortgage to pay back, you wouldn't necessarily get your money back, but it's not essentially protected in the same way that a depositor protection scheme. That's usually, if it's in an offset, it's usually sitting outside of a standard savings product. I say that's my understanding, but yeah, I might need to check that and come back to you on that. But
so John, we'll have a look into that, and if there's anything we can share with you, we'll get in touch. Thanks for your question. Let's talk about remortgages. So in this awful period, we've come to the end of our rate period, and we're looking to remortgage. Is now the right time to do it, Roy?
$1 million question. I think what we are seeing is, ironically, pre-COVID, the way the market worked is a new lender would offer you a very good rate to attract you as a new customer. There really wasn't a market, there really wasn't the inclination of lenders to pay a premium to keep you. It was accepted that new customers only would win out. So very much there was a remortgage merry-go-round. What we've seen is, with lenders not necessarily wanting to take on new risk, they're offering very competitive products to keep their best clients. And we're recommending more often now what we call a product transfer. So not to move lenders, but to change products and stay with the same lender. In terms of a pure remortgage, I think the issue is that the COVID impact on the ability to get valuations. And where that can't happen, especially if you've got local lockdowns, a lot of lenders are going to automated valuations and desktops. Those algorithms will undoubtedly have a degree of safety built into them. They're not going to be open to appeal. So you could go through the process and find your new lender says your house is worth a lot less than you think it's worth, and then you don't get the product you want. And there really isn't any way that somebody like myself as a broker, it's the hardest thing for us, one of the aspects that's hardest thing to do, because you can look at things like Zoopla and Rightmove and get a yardstick, but the lender will have the final decision. And in my opinion, there's no doubt that they'll be worried about prices falling. They'll build that into their modelling. And therefore you find that actually, you know, your new lender says effectively you're paying a higher rate than the one you're leaving, because they see you as a higher risk, because you're now at 90% when you were at 85 with your previous lender, for example. So that's where a broker comes in to look at the options, to stay with your current lender, go to better rate, or whether it is advisable to move to a whole new lender.
Great stuff. Just going back, Roy, you and I have had a conversation about this before on the divorce situation. So such a positive conversation on a Friday afternoon, morning. So going through a divorce, both own the house. Someone's got the deposit to move into their new house. So say the wife has got the deposit to move into the new house and needs to borrow. But obviously, what's the situation? How does this process work? When you're going through a divorce, at what point do you start to go, ooh, hold on a minute, and take a pause? And what would you advise to be the process?
Okay, I think the first to do is engage somebody like a broker as early as you can. Obviously, it's going to be a very personal, subjective, circumstance for those individuals. So a lot of it will depend on how amicable it is, how cooperative both parties are going to be. If we assume that it is, then it's in essence no different to the before. You either got a choice that the house is sold and both parties buy another property with their share. If one wants to stay in the house, then you can have something called a transfer of equity, where they buy out the other party's share. And then once that is completed, that forms a deposit for the other party then to be able to go and buy their next house. But yeah, I would advise that even when it is amicable, both parties, having been through it myself, both parties have a solicitor to make sure that everything's done by the book. Everybody's happy, because the agreements need to be reached, because the lender won't let you commit to it until those things have been, nailed down.
Okay, thanks for that. Simon's coming with a question. That's a good one. So they own their home outright, so there's no mortgage on their current home. If they want to take a mortgage out on their existing home, is that classed as a first-time buyer or a remortgage?
It's a remortgage. Although, I say some lenders, some lenders I have seen definitions where it says if you haven't bought a property in 18 months, but I think the fact that you already own a home, I think you would very much struggle to be justified by anything other than a homeowner, and therefore not first-time buyer.
I see you nodding along to that. Is that your opinion too?
Yeah, I would have said remortgage, yeah.
Yeah, that's fine. Simon, I hope that answers your question. I'm just looking through to see if I can make sure I haven't missed anybody's questions. If you have got any additional questions, we're here for another 10 minutes or so. So do feel free to pop your questions in the box on the right-hand side. If we don't get to any questions, if there's some that we haven't answered, I've got a full log of the chat, so I will make contact with you and sort of feedback with these guys so we can get some answers to you. So any more questions, please do submit. Simon, you obviously answered Simon's questions, so thank you there. So going back to the questions that were submitted before we went live. So back to first-time buyers. There's actually some questions come in. So first-time buyers and gifted deposits. Somebody asked you, is on every product you offer can have a gifted deposit? Is that correct?
Yes. Yeah, we offer gifted deposits. Yeah. So we also have like a template we can give to your broker where the giftor would have to complete that template. What we would want is evidence of those gifted funds. We need to see audit trails. So to satisfy anti-money laundering requirements, we do need to follow the trail of where that money's come from, essentially. So the origin of the funds. That's really important. Make sure to have all of that ready. It might seem quite intrusive. I do say this a lot, especially to our brokers. It seems like an excessive amount of documents, very intrusive. It's needed. We have requirements that we have to satisfy.
That's fine. Can a deposit be from multiple sources in the family?
Yes. So we've had it before where it's boyfriend, girlfriend, boyfriend's dad is gifting, girlfriend's mum's gifting, the nan wants to chip in as well. So yeah, it's just everyone needs to be able to provide all of that documentation.
And is it just family members?
Yes, family members.
Yeah, so it can be aunts and uncles, it can be stepbrother, stepsister, but they have to be within the family.
Yeah, we have definitions on our website as well. It has to be close family members, but we break that all down on our website. So if you want to go into more detail and make sure that you're definitely going to fit with us, all of that's on our website.
Is that the same for other lenders, Roy?
Predominantly, yes. I mean, there are some exceptions, but I think as Taze alluded to, the anti-money laundering requirements are a big thing for lenders. I think the obvious question would be asked, well, who is this person to you if they're giving you money? So that would be a big concern to the lender, yeah.
I can see why. Okay, so say you could have a breather for a second, because Roy, we're going to ask that almighty question that I asked you before, and it took us we had a half an hour answer, so maybe we could restrict that down. Can we talk through the mortgage process, the documentation that we have to consider prior to taking out a mortgage? So for those that are about to or thinking about remortgaging or will be in the coming months, what is the documentation they need, and what will they need to provide to a broker in order to get to that stage where you've got the package you need to then go for the product you want?
Okay. Well, there is essentially two elements. There's the documentation the broker will need to be able to discharge their duties, regulatory duties. Some of it may not be requested by the lender, but I'll give you effectively both parts. We would need to see something that confirms their identity and confirms their address. So that's usually passport, photos, driving licence, council tax demand for confirmation of their address. If they're a young first-time buyer living at home, if they've got a bank statement with their address on, that's usually acceptable to most lenders. Then when it comes to the other elements around deposit, then we'll need to see, as Tace just said, assuming it's not gifted to make it a bit easier, but again, the latest statement showing those funds being held in that person's name. And it may be the lender might ask for, as Tay said, the audit trail for statements going back from where it started, showing it being added to each month. The ISAs that people have had for Help to Buy, you know, showing those being opened and being added to regularly. Then you've got the bank statements themselves. Now, usually it's 1 to 3 months, depending on the lender. Some are asking for more, 4 or more. Some might want to see bank statements again pre-lockdown to see what was going in and out of accounts. I think lenders are also asking for that because they're looking to see, in the case of somebody remortgaging, were they making a mortgage payment and have they then taken a mortgage payment holiday? So whilst it's not going to affect their credit file, a lender may be interested to see if they're taking it. I know that there's been cases of people using the mortgage payments to then save those funds up for their deposit. So it's essentially borrowed money, and I think the lenders won't like that. Payslips, again, as I said, last 3-4 months. Sometimes, again, lenders are asking for pre-lockdown. Contracts, some are asking for P60s to make sure that they're seeing if there's any bonus, commissions, any of those incomes that may not show on a monthly payslip might be paid annually. So, you know, all of those sort of things, pretty much as a minimum, are likely to be required more by the broker, to be fair, than some lenders. And that's because the lenders themselves now can do a lot online. There's lots of in databases, government databases, they can interrogate data, but they're looking to ask the client just to see how honest they're being about what they're declaring. Can they evidence it? And does it support what the lender's own inquiries show? So sometimes they're doing it just to sort of see it as a sense check.
That's great. I think that probably answers if you're a little bit unsure about the processes. Will give them a bit of an insight into what they need. I think especially from the self-employed perspective, because that's going to be very, very difficult. I know we discussed it earlier, but if anyone does have any self-employed questions, feel free to submit them now. We'll answer them at a later date. We're running very short of time now. So the very final thing then, Saffron Mortgage Finders, let's talk about them for a second, Roy, because I haven't really had a chance to introduce who mortgage finders actually are. Can you explain who you are and how you're relatively new as an organisation, aren't you?
That's right. So it's a brokerage that's wholly owned by the Saffron Building Society. My understanding is it came out the fact that when they were dealing with the public as well as brokers, there was a large number of cases with the public that they couldn't place themselves with their own policy, and wanted to be able to help those people as a society, and felt that, you know, by having their own brokerage, they could then direct those customers through their website to say, well, we can't help you, but have refer you to a broker, and they can look at the wider market. So we launched, I think it was in May, I think it was. So I've been in the industry over 30 years. Yeah, some days I feel I look it. You know, I joined at the start, and it's been a pleasure and a privilege to sort of help mould it and get it started. But for me, a bit like the society staff, always having that client at the end of it in mind and wanting to help them and getting them into their home is something that, you know, is always a joy to do.
You answered the question I was going to ask you, actually, because it seems from Saffron's perspective, Tay, it seems really strange that you would open a brokerage service under the umbrella of the company to drag people away from your own products. But as Roy
sounds
says,
crazy, doesn't it? You think we'd be like, no, don't leave us. No, Roy.
I think it's important to remember that a hell of a lot of people don't use a broker because they might get a really good offer from their bank for their first mortgage, and they've probably never worked with a broker before. But having said that, people may not have heard of Saffron Building Society. However, if they've been through a broker, they may well have seen those products appear, and they may well have one of your products. So I think it's, it did seem a bit like it was self-defeating, but it actually works in the customer's favour.
Absolutely. Yeah, Roy answered that perfectly. It's what else can we do to help our customers? And that was the perfect outcome.
It is, very much so. And so just a reminder, Roy, how many lenders do you have through Openwork? How many lenders do you work with?
I think it's about 53, I think it is.
Brilliant.
So we just say just over 50.
So for those of you who may need a brokerage service, Saffron Mortgage Finders is available to you wherever you are in the country. The website is saffronmortgagefinders.co.uk or .com, they both work, but Saffron Mortgage Finders, search it online. Anything to do with Saffron Building Society, their website is saffronbs.co.uk. All the products are on there. Although you may not be able to apply for them on the Saffron website, it does give you advice to go to a broker, but it gives you the reason to ask for a product. So if you go on there and see a Saffron product, you think, oh my God, this is great, but I can't apply for it, then it does give you advice on how you can go about applying for those products. So last thing to say is a big thank you to everyone that's watching. Thank you to those that are thanking us. I just seen some notes come up. Tay, thank you very much. Tay Sturgis from Saffron Building Society, Roy Mason from Saffron Mortgage Finders. An absolute pleasure. Hope you've got everything you need from it. Again, if you've got any additional questions, you can submit them and we can answer them at a later date. I've got all of your contact details from you signed up. So again, the Mortgage Clinic will be back. This is one of many. So we're going to open this up as the market continues to change to keep you informed. Tay may be back with us again soon, so may Roy. So fingers crossed that'll be soon. But thanks very much, guys, and good afternoon.
Thanks, goodbye.
Bye.